Good morning, everyone, and Happy New Year. We're back today with another episode of Daily Rates Live with the Mortgage Calculator. And today we're going to obviously check out all of our standard programs. We are a licensed lender and broker in over 20 states with over 200 loan officers that would be happy to help you out with any of the programs we go over. Today we'll check out our standard programs and then we'll do a deep dive into our non-QM Cash-Out Second Liens. So one of our most popular requests and definitely a pretty unique loan type there. So if you have any questions, you can feel free to drop them in the chat. We'll definitely try to answer them, or one of our loan officers will help you out. And you can also, of course, get a live quote anytime on our website, themortgagecalculator.com. So without further ado, let me go ahead and get started for today. And the first thing we always want to do is check out the general market conditions. So let me quickly switch my screen. And one of the things we usually want to look at when we're talking about mortgage rates is the 10-year Treasury. Definitely one of the best tools here that tracks rates in general, especially when we're talking about different types of programs, first lien, second liens, government, non-QM, all kinds of different options. We want to basically make sure we're looking at a metric that looks at the overall rate environment. So you see here in the last 5 days, a little bit of upward movement. Fortunately, today we see some downward momentum, which is great. But I always want to put this into perspective for everybody out there shopping and all our team members watching. We're still pretty much at 1-year lows. So definitely still a great time for all of our borrowers out there shopping. The day-to-day doesn't really affect rates as much as you might think. Overall, we're definitely moving downward, which is great. Now let's check out some of our actual programs here. So for our live rates page here, we always set up a standard scenario so we can compare all the different programs across the board. So we set up a single family 1-unit home, 500,000 purchase price, 300,000 loan amount. That corresponds to 60% loan to value. We use an estimated 760 FICO credit score and an estimated 40% debt to income ratio. So we set that scenario so we can compare all the different programs, apples to apples, across all kinds of different options here. So first up are conventional loans for a primary home. Typically what you think of when you think of a mortgage, standard 30-year fix, coming in today, 5.875 rate. Final APR with all the fees included there, 6.111. And if our customer doesn't qualify for conventional, typically the next option we want to look at is FHA. FHA does allow more leniency on credit issues and an overall higher debt to income ratio, but does require upfront and yearly mortgage insurance, more fees there. So FHA comes in at 5.375 rate, but with all the fees included, final APR comes in at 6.25. So you see they're a little more costly than our conventional option. Definitely great for our borrowers that need to use it. And for our eligible vets and active service members and surviving spouses, of course, VA programs are amazing. So rates today for VA coming in as low as 5.25. And with all the fees included there, final APR comes in at 5.512. Much lower on the fees there for our vets. So a much lower APR, definitely typically the best option for anybody that is eligible to use those programs. And another government option here, USDA programs eligible for properties in those USDA eligible areas, typically the rural areas of the country. If our borrower is eligible with the income limits and the property is eligible, these are great options. Rates today for USDA coming in as low as 5.125. Final APR with all the fees, 5.779. So typically our customer shopping in those areas is going to be comparing that to an FHA or a conventional option. And you see here the APR is overall lower. So definitely a great option if you are looking in those areas. And now where we start to shine at the Mortgage Calculator, we love to offer our outside-of-the-box solutions. So we have our non-QM alt-doc options for our primary home here. So alt-doc means if our customer doesn't qualify for conventional, FHA, et cetera, using tax returns and all the standard documentation, we can use alternative docs such as bank statements, 1099s, P&Ls, all kinds of different options once we get into the non-QM realm. Definitely helpful for our self-employed borrowers. So our option here for using alt docs for a primary home, rates today come in as low as 6%. Final APR 6.272. So which is typical, it's just a touch higher than conventional to switch to non-QM and use alternative docs, especially for those self-employed borrowers that need it. And we can use alternative docs for investment properties as well. For an investment property, rates today come in as low as 6.125. Final APR 6.448. You see there. And we'll compare that to our conventional option for an investment property. Same rate, 6.125. Final APR, 6.438. Almost identical, just a touch cheaper. And we have our favorite non-QM option, or at least my personal favorite, our DSCR option for our investors out there. It stands for debt service coverage ratio, no income or employment needed. We simply use the estimated rents to determine a DSCR ratio for the loan. The estimated rents can cover the PITIA of the mortgage plus standard expenses, aka the property will cash flow monthly. That's a ratio of 1 or higher. That's what we use for all our scenarios here. It includes a 3-year prepayment penalty, which is standard for these types of loans. Rates today coming in at amazing 5.999. Final APR 6.222. And we can add a 5-year prepay to lower the rates even more. Rates today come in as low as 5.875 if we add the 5-year prepay. Final APR 6.181. Both options are beating conventional. Absolutely amazing. And there is an option for no prepayment. Some states don't allow, and some investors prefer not to have one. No problem. For no prepay, comes in at 6.125 rate, same rate as conventional. Final APR 6.448, just a touch higher than conventional to use our DSCR option with no prepayment penalty. Pretty amazing. And we have a ton of other options here. We're going to be talking about our non-QM second mortgages here today for primary and investment, so I won't go over those. But if you check out our live rates page, we have dozens of other programs that you can check out there. For our deep dive today on second liens, we always want to make sure we have a property in mind. So even though we're talking about cash out second liens, I am going to pull up a property that is listed for sale. So this is just a standard property I just found clicking around in my area. And you see here, this is a nice home, nice pool home, looks very nicely decorated, maybe a short-term rental, whatever it may be. This borrower in this case, we're going to say, has this for sale for $1.2 million or $1.25 million. They're looking to sell the home, obviously. Maybe they just need to get cash to perhaps purchase their primary home. Maybe this is their current primary, they're moving out. Whatever they need, we can offer a cash out refinance to our borrowers that may not be able to sell the property for the value they want, or whatever may be the case. So for this scenario, I'm going to use this property, $1.2 million property here, and we're going to assume that the borrower, in this case, the person that has it listed for sale, the seller, put $400,000 or has a $400,000 first lien on the property that they're trying to perhaps get some extra cash out to sell the property outright. But if they don't sell the property, perhaps we can give them a second lien to get the cash they need. So for our first example here, I use this exact home, standard single family home there. And we're going to go with our non-QM, 1-year full doc is what we actually set here, fixed second mortgage with the max cash out of $500,000. So that's the max we can go at the moment. We could go up to $750 just a short time ago. Right now it's $500 for this non-QM fixed second lien. And this is for this exact property. So some pretty amazing options here. We can get rates as low as 7.625 for 1.875 discount points and cost for this exact scenario. And the lowest cost option here, we have an 8.125 rate that actually gets us 0.5 back in lender credits towards closing costs. So a couple great options here. And you can see our first mortgage that we assumed here was $400,000, and we were able to add a second mortgage for the maximum amount of $500,000. And that corresponds to an overall combined LTV here of 75 in our demo. And we use the same FICO score and other settings as we did on all of our other standard scenarios. So this is a great option for our borrower to maybe loosen up $500,000, whatever they need to do, and perhaps they can keep the property as a rental property or afford themselves some more time to sell the property for the price that they need. Now, if our borrower needs to use alternative docs, that's why we love these non-QM programs. We can do, of course, standard full doc, which means 1 year of tax returns in this case, because we did 1 year full doc. If we want to do 1 year alternative doc, so if our borrower is self-employed, maybe their tax return isn't ready, isn't complete yet, whatever the case may be, if we need to use alternative docs, we can do that here. So with this option, we selected bank statements as our alternative documentation option. So 1 year is 12 bank statements. And this is the same exact scenario here. So you see the cost is just a touch higher. So lowest rate option here, 7.75 rate for 2.475 discount points and costs. And if we go with an 8.375 rate, we have a lender credit of 0.4 towards our closing costs here for the same exact scenario to use 12 months of personal bank statements in this case. Now, if our customer is already renting this property out, maybe this is a rental property, maybe it's an Airbnb property, it looks pretty nice, we can do that as well. So we have our fixed seconds for investment properties. So our next scenario here is going to be our typical request. So most of our investors are going to use an alt doc option. So the same option we were just talking about before. It's going to be 12 bank statements there. And this is going to be the same settings. The only thing changed here is the occupancy is now an investment property. You see here the rates are a little bit higher, still better than our HELOC, our adjustable rates, which is typically what we're going to compare our fixed seconds to. And lowest rate option for an investment property here, 8.375, costing 3.225 discount points in cost. And if we go up to a 9.25 rate, we can get a little tiny bit of 0.025 lender credit towards closing costs. So you see here the costs are a little bit higher when we switch to investment property, which is typical. And it's all the same thing. We can still get 500,000 estimated cash out. We're still using those bank statements, still using all the same scenarios and the 75 LTV. Now we can sweeten the deal for our investors out there, again, using one of my favorite programs, our DSCR. So we can use DSCR underwriting here. And in this example, we used a 5-year prepayment penalty to give us the best rates and prices. And this is, again, for the same exact scenario. No income or employment needed, no bank statements needed. We're simply going to use the estimated rents from the rental property to determine a DSCR ratio. Now, this ratio has to be over 1 in order to do this loan, but hopefully that is possible with this property. So to go DSCR, again, rates are a little bit higher than primary, but absolutely amazing for a DSCR second. 8.75, costing 3.1 discount points in cost. And if we go to a 9.5 rate, that is our par rate or zero cost rate there. So some great options for our investors, some great options for our homeowners. Of course, we can do a second home as well, but I wanted to show the most common examples. So 2 of the most common examples for our primary borrowers and 2 of the most common examples for our investors there. So hopefully that was helpful. Let me go ahead and switch my screen. Again, if you have any questions or want to get your own quote, we're licensed in over 20 states. And we can even close those DSCR loans as business purpose in even more states. So great options there for our investors. And our team would be happy to give you a quote. We have over 200 loan officers that would be happy to help you out. Just visit our website to get started. Don't see any questions here on the live chat for today. But thanks, everybody, for joining us. We'll be back later this week with another episode of Daily Rates Live with a new topic. Have a great day and Happy New Year.